I need to address the title. Yes, it says one weird trick. Yes, it sounds exactly like the kind of content Mia would spend an entire video dismantling. The sponsored post with the stock photo of a person looking shocked at a laptop. The listicle dressed as insider knowledge. The financial content that promises a secret and delivers a newsletter sign-up. I know, stay with me. Because here's the thing about the one weird trick framing. The reason it has survived 15 years of internet saturation and increasing audience skepticism is that occasionally, underneath the clickbait packaging, there is an actual mechanism, a real, specific, underutilized action that the industry has no particular interest in advertising, because the people it helps are not the people the industry is trying to help. This is one of those times. The trick is real. The 90 days is real. The banks hate it part. That is real too. And I will show you exactly why in the math. What is not real is the weird part, because there is nothing weird about it. It is straightforward, documented, federally protected, and available to anyone carrying a near-prime credit score who has ever had a payment go late on an otherwise clean account. It is called a goodwill adjustment. And it moved my score, 41 points in 63 days. My name is Mia. I spent years inside financial services. I knew this mechanism existed. I used it on myself when I needed it. And I have watched it move scores for people who had spent years trying everything the generic advice told them to try, paying on time, keeping balances down, waiting for the negative mark to age off the report, without understanding that there was a faster, direct, and completely legal path sitting one letter away. Today, I am showing you the whole thing, what it is, how it works, what to write, what to expect, and why the bank has every incentive to not answer your question unless you ask it the right way. Let's start with the mechanism before the mythology. A goodwill adjustment is a request made directly to a creditor, asking them to remove a negative payment notation from your credit report as a one-time courtesy, not dispute it, not challenge its accuracy. Request its removal on the basis of your otherwise positive account history and a specific documented circumstance that explains the late payment. This is a different action from a credit dispute. A dispute says the information is wrong. A goodwill adjustment says the information is accurate but asks for mercy on the basis of relationship and context. And it works. Approximately 30 to 40% of the time, when the request is properly constructed and sent to the right person, the creditor agrees to remove the notation. They are not legally required to do so. They are not bound by any regulation to say yes. They say yes because account retention, customer relationship, and the cost of processing a response that creates goodwill with a customer they want to keep outweighs the minor inconvenience of removing a notation from a bureau report. One removed late payment on an otherwise clean account is worth between 15 and 45 points depending on the account age, the recency of the late payment, and the overall composition of the credit file. For a borrower sitting at 680, 40 points below the prime lending threshold, one successful goodwill adjustment can close the gap in a single reporting cycle. That is the mechanism, not magic, not a loophole. A documented legal request that most near-prime borrowers have never sent because nobody told them it was an option. Here's the part that should make you genuinely angry for approximately 45 seconds and then motivated for considerably longer. The goodwill adjustment option is not hidden. It is not proprietary information locked behind a paywall. It is a standard customer service function, available at every major credit issuer. The people processing these requests know what they are. The supervisors approving removals know the process. They just do not tell you it exists because a customer who successfully removes a late payment notation, crosses the prime lending threshold, and qualifies for lower interest rates is a less profitable customer than the one who remains near prime paying near prime rates on a revolving balance. The late payment notation, accurate, aging, doing exactly what the credit system says it is supposed to do, is also functioning as a revenue retention mechanism. Every month it stays on the report is another month of near-prime interest rates on near-prime balances. The bank's customer service line is not designed to help you improve your credit score. It is designed to resolve account issues while retaining profitable customer relationships. Those are different missions, and the goodwill adjustment exists at the intersection. A retention tool the bank will deploy when asked because it costs less to say yes than to lose the account, but will never proactively offer, because proactively offering would cost them the near-prime premium. You have to ask, specifically, in writing, to the right person? With the right framing, most people who attempt a goodwill adjustment fail not because the mechanism does not work, but because they write the wrong letter to the wrong person. The wrong letter is a complaint. It expresses frustration, argues that the late payment was not really your fault, implies the creditor did something wrong, or demands removal. Complaints generate defensive responses. Defensive responses generate form letter denials. The notation stays. The right letter is a request. It acknowledges the late payment without disputing its accuracy. It provides brief, specific context, a job loss, a medical event, a family emergency, a processing error you did not catch in time. It demonstrates that the late payment is anomalous against an otherwise consistent payment history. It asks, not demands, asks for a one-time courtesy removal as a reflection of the overall positive account relationship. The tone is the mechanism. You are not a wronged customer demanding correction. You are a loyal account holder with an otherwise clean history making a human request of another human being who has the authority to say yes. The letter goes, in writing, not by phone, to the executive customer service team, not the general customer service line. Every major issuer has an executive resolution department with elevated authority. Chase, Citi, American Express, Capital One, and Discover, all of them. The address or secure message pathway is typically findable through the issuer's website under Executive Correspondence, or by asking directly when you call the general line for the escalation contact. The letter includes 3 things: your account number and contact information, a brief factual description of the circumstance that produced the late payment, a specific request for removal as a goodwill gesture. It does not include an apology for existing. It does not include a threat to close the account. It does not include emotional language, excessive explanation, or anything that reads as a demand rather than a request. 1 paragraph, sometimes 2, sent to the right person, followed by a written confirmation of receipt. I had one late payment on an American Express account. 30 days late, 3 years prior to the request. The account had been open for 6 years with 0 other derogatory marks. The late payment was the result of a banking transition. I had moved my checking account and the autopay did not transfer correctly. I caught it, paid it, and assumed it would age off eventually. 3 years later, it was still suppressing my score. I wrote the letter. 1 page. Acknowledged the late payment, explained the banking transition briefly. Noted 6 years of otherwise clean history. Asked for a one-time removal as a goodwill gesture. Sent it to American Express Executive Customer Service via certified mail and the secure message portal simultaneously. Response time, 11 days. Outcome, removal approved. Bureau update processing time, 22 days after approval, because the Bureau has to receive and process the updated trade line from the creditor before the score reflects the change. Total elapsed time from letter to score change, 33 days. Score impact, 27 points. Combined with the simultaneous utilization reduction I had already initiated, total score movement in 63 days. 41 points, 1 letter, 11 days for a response, 22 days for the Bureau to update. 679 became 720. Near prime became prime. The mortgage rate surcharge I had been carrying as a prospective buyer disappeared before I applied. You have been paying the near prime premium on your credit card rate, on your auto loan, on the mortgage you have not taken out yet but will, because of a notation on a report that a creditor has the authority to remove right now if you ask them correctly. You are not behind. You've just been reading a map drawn by the people who want you lost. Hit subscribe because next week I am inside the mortgage pre-approval process. The rate theater, the closing cost ambush. The fees materialized 72 hours before you. Hand over the biggest check of your life, and showing you every extraction point between the application and the keys. And I'll leave you with this. 1 letter, 1 paragraph, 1 creditor who can say yes right now. The weird trick was never weird. It was just the question they were counting on you, never to ask.